Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 16th of May. Soft Chinese data revives stabilization concerns. Over the weekend, China released a raft of data that reignite doubts about the nation's economic stabilization. Fixed asset investment, retail sales and industrial production all missed expectations and slowed in April, suggesting that the upbeat March prints were not descriptive of the underlying trend in economic activity. This data came on top of the declines in all of the nation's major manufacturing and services PMIs for April. Therefore, they weren't much of a surprise. In any case, we believe that these disappointing readings may contribute to the return of a somewhat risk-averse sentiment among global investors, which could keep commodity currencies such as the Aussie and the Kiwi under selling interest, especially following the recent rate cut by the RBA and high speculation for further easing by the RBNZ. Furthermore, the recent rebound in the dollar is another factor that may weigh on these currencies, as a stronger greenback tends to weigh on dollar-denominated commodities. Last week's better-than-expected US retail sales for April increased speculation that GDP growth may have rebounded in the second quarter. If incoming US data continue to surprise positively, we may see expectations for the next Fed rate hike coming forth. As for today, we have a light data calendar, as we get only two US indicators. The Empire State Manufacturing and the NAHB Housing Market Indices, both for May, are due to be released, but neither of these indicators is usually a major market mover. Markets will remain closed in many European countries in celebration of Week Monday. We have no speakers scheduled for today. As for the rest of the week, on Tuesday, the Reserve Bank of New Zealand will release its two-year inflation expectations. Even though no forecast is available, we believe that this is likely to be the main determinant of whether the Reserve Bank will ease its policy further in the near term, as the latest decline in the figure was the catalyst for the surprise rate cut in March. As for the rest of the day, we get April's inflation data from both the UK and the US. On Wednesday, the Fed will release the minutes of its April policy meeting, where officials stood pat, as was widely expected, and did not offer any signals that they are willing to hike rates in June. Since then, softer data for the first quarter diminished even further the possibilities for a June action, so we will treat the minutes as outdated, and as a result, we don't expect them to be a major market mover. From Japan, we get the preliminary GDP for the first quarter, and expectations are for the nation's economy to have expanded by 0.1% quarter over quarter, following a negative print in the fourth quarter. Although the forecast is for a marginal expansion, we have to sound a note of caution, as another contraction in economic activity would sink the nation into a technical recession. In the UK, the employment report for March is due to be released. On Thursday, we get Australia's employment report for April and the UK retail sales for the same month. Finally, on Friday, we get Canada's CPI data for April. The forecast is for the headline figure to have accelerated, while the core rate is expected to have remained unchanged. This may be the result of the rise in oil prices, providing a boost to the headline rate. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.